We're talking about the commodity markets now and asking the question whether these US trade sanctions and the subsequent retaliation has the capacity to move the commodity market in any one particular way. And what is it that could trigger a move? Well, SP Angel mining analyst John Meyer joins us now with some more. We're hearing a lot of the headlines, of course, about the US and they're wanting to almost punish other nations for doing what they're doing internally in supplying the market excessively with some base metals. First of all, what's your take on what's happened so far? And does it have a relationship with any movement in the commodity markets?
There is a bit, yes. I mean, the sanctions against Rusal have impacted aluminium, which has been strong recently, and the potential for further sanctions in Russia is having an impact on other Russian stocks. A lot of them have been sold off quite naturally, but the market is concerned that perhaps if those sanctions are extended, perhaps to Norilsk nickel, that would impact the nickel market, the platinum market, the palladium market, where Norilsk is very strong and it's the world's largest supplier of nickel and not far off that in terms of palladium and platinum. So a very important provider.
We've seen as well Rusal, an aluminium producer in Russia. The stock has been, well, it's only lost about a third of its value. The flip side to this, though, is the fact that these metals are not just available in Russia; they're available in other parts of the world. I'm hearing that Russian legislators have suggested that they stop export of uranium from Russia to America to supply the uranium market there. But we've only heard recently in Canada, Cameco has said that it's going to stop uranium production because it's not economic. The price goes up, all of a sudden these things become economic in other areas of the world.
Well, other nations are saying, well, what can we do to frustrate the Americans? And we've seen a bit of that with the Chinese putting extra tariffs on certain food products, pork, for example, which of course the Chinese love to buy, and they think that might hurt some of Trump's voters. But I think that's a strategy that's almost bound to backfire on these other nations. So for the Russians to perhaps restrict the supply of uranium, fair enough, but the Americans or the North Americans will just restart some idled uranium production, which is pretty easy for them. So this is tit-for-tat politics. I don't think it's really going to slow down global growth particularly.
And you don't see any new mines or old mines reopening, coming on board because of what's happening at the moment?
I think it's more likely that idled production will be reactivated. It's quite hard to make that decision to reopen an old mine. I mean, we finance people to do this all the time, but in reality, you're not going to make that decision based on a little bit of short-term politics. You want to do that based on longer-term, higher prices. Now, I think what we're seeing with nickel is the price was going up anyway, so the speculation with regard to Norilsk nickel has just helped that price move maybe a little bit quicker than it was going to move anyway.
Yeah. Let's talk about some of the companies that could benefit from this current environment here. Let's assume that this is not going to move the commodity markets or the metals markets themselves too much. Which companies could benefit from what's happening at the moment?
Well, at the end of the day, if Rusal can't sell aluminium to America, those American consumers will buy it from somewhere else. That means the premium goes up. That means the beneficiary is really the trading groups like Glencore, who are very, very good at moving metal around the world and taking a little bit more profit out of that as part of the process. So Glencore brilliantly well placed, Noble Group to some extent. So those are the two that investors can buy. Most trading groups are naturally private because much of what they do, they don't really want to talk about how they do it too much. And there'll be some others local companies that will benefit from local premiums.
Let's just step back from the US and China and Russia and talk about the commodities markets as things stand at the moment. We've just seen a quarterly production report come through from Rio Tinto. That majors, of course, in copper and iron ore. The stock was up as a result of that report this morning, and it's producing at the top end of expectations, all going very well. What about the commodity markets generally at the moment?
They are good. I mean, I think the political issues are pushing on an open door at the moment. These metals were looking for a reason to go up, particularly nickel up 4% first thing this morning because of the Norilsk rumours. But the price was going higher. Battery metals is the big thing at the moment. Some companies, I think, are stocking up on some of these metals because they are assuming that the rise in demand for electric vehicles is just going to continue to go. In fact, if anything, I think policymakers will push that push consumers faster in that direction. We're already seeing large numbers of diesel vehicles being parked up in California and other places. Consumers are rightly saying, we're not interested in buying new diesel cars, we're going to buy gasoline, we're going to buy hybrids and stuff like that. There is a little bit of negative news with people's cars catching fire on their driveways, stuff like that. So the construction of these battery packs is going to have to get better, because you can't have a lot of that going on. That's not good. But I think the policymakers will ignore a lot of that. They're going to say we want cleaner air. That's what's going to win us votes. That's the new mantra. Less diesels, more smaller gasoline engines, more hybrids, more batteries, more rare earth metals in the electric motors for those, more nickel, more lithium, more cobalt.
Yeah, what about the big base metals? I was talking there about Rio and its exposure to copper and to iron ore. We just heard recently Chinese GDP, 6.8%. We always hear that sort of figure around, of course, the Chinese economy, but it is nonetheless still growing. Demand for these base metals still there, the coppers and the iron ores for the construction industry and so forth?
News from the construction industry is that across the world it's still strong. So vanadium for steel, for rebar is well, the vanadium price is 3 times what it was 18 months ago. So that's very good for those producers. Aluminium, good for Rio Tinto because they bought Alcan some years ago, huge aluminium producer actually, and it doesn't get talked about much, but they will do well from the situation in North America and the fact that Rusal can't sell to anyone at the moment. But of course the sanction busters will be out and Rusal aluminium will end up in world markets one way or another. That's just what happens. So the sanctions will have, I think, limited impact, but there is short-term impact, which is very good for these companies. Yeah,
OK. All right, John, thanks so much indeed for updating us on where we are in terms of the moves at the moment in the commodity markets. And clearly there are bigger stories and longer-term stories than just the trade spat that seems to be bubbling around at the moment with some of those larger economies. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.